Hey folks, it's Vic Noble here with your weekly trade example for the week ending May the 24th of 2013. There's a lot of importance placed on one's trading system, and for sure it's important. But in fact, most people don't even really have a system anyway, or if they do, it's quite often temporary until the next best looking thing comes along. But the trading system is actually less important than what some people make it out to be. What really makes the big difference in your trading is how you exit a position and what kind of position sizing that you use. And today, I thought I'd talk a little bit about getting out of a trade, which from what I've seen over the years as a coach is one of the most difficult things for traders, and yet it's something that can make such a huge difference in your bottom line. When we talk about exits, we're talking about exits for different purposes, right? So for example, we want to have an exit if we're wrong. That's our stop loss. That's an exit that we need to know about before we even get into the trade. And there are very simple yet effective ways to determine this kind of an exit. Do you know, for example, where you're going to get out of a trade before you get into it? Because you need to know this. It's really important. We also have exits for when price starts to move in our favor. And actually, there's a couple of exits here. You might have a trailing stop exit, for example, so that when price moves in your favor, you start to reduce risk so that if the price reverses on you and you get stopped out, then your exit's going to be less than your original risk. Okay, so you're preserving capital. Or if prices moved sufficiently in your favor, or maybe it's at a level where you don't want to take any more risk if price goes against you, or there's an impending major news announcement or something, then you might move your stop up to your entry price, giving you a break-even trade if it goes against you. And by the way, just so you know, we never ever move our stop further away. That's just a sucker's game, a bad thing to do, and I'm saying this because I've seen people do it, unfortunately. And of course, another exit is at a place where you believe price is at a level that's not only significant, but is, and this is really important, it's at a place where you can achieve a very good reward to risk by exiting at that level. I can't tell you in strong enough words how important this idea of reward to risk is. It's imperative that you think in terms of reward to risk all the time in your trading. It'll make such a big difference. And of course, position sizing, but that's another topic for another day. Let me tell you exactly what I mean here. Say you're a day trader and you're risking, say, 15 pips on a trade. If you're taking profits of 10 pips on that 15 pip risk, you're going to have to rely on incredible accuracy to be profitable. And your account's not going to grow that fast either. That is not a good formula. Like if you had 2 losing trades in a row of 15 pips each, you'd need 3 consecutive winning trades of 10 pips each just to break even. Now think of this, if your winning trades were only twice as much as your losing trades, you wouldn't even need to be right half the time to be profitable. And if your winning trades were 3 times your losing trades, your accuracy only needs to be about 30% right. You don't need to be right about 30% of the time and you'll be profitable. That's pretty incredible, isn't it? I mean, that's just arithmetic. But here's what happens, and there's another kind of exit called a psychological exit where you get out of your trade for psychological reasons. And these are things like getting out way too early without having a grounded reason for doing so because of fear. Or maybe it's the opposite where you have a huge profit going for you and you're at a key level and maybe you have a profit of 5 times what you've risked, but you don't get out of the position because you start to get greedy. And yet everything's telling you to get out, and then the trade ends up going back against you. So you can see that how you exit is just incredibly important. And I'll tell you something, and I'm going to give a shameless little plug here for my Coach's Corner service, but we go over this stuff all the time. We show people exactly how to handle all the exit scenarios once they're in a trade, where the initial stop should go, how to manage the trade, where to consider exit points for profits, etc. So let me just show you a quick example here. This is the British pound US dollar rate here that you're looking at. And this is using one of our recurring Forex pattern setup called Pattern 6, the VIC trade. And it was this move here on the 23rd of May where we went up and came down here. And when it came down here, this set up one of our trades right here. The 150.60 level, 150.60 level was the buy right about that level, which was also a 45-minute MOF. We teach slingshots and MOFs in there as well, and it matched up really nicely in here. But the key to it here was that once it starts to go up like this, where do you get out of the trade? And the place that I had targeted on this was right up here, and I'm not saying that because it's the high of the day up here, but it was a logical place to look for profit. Why? If I look to the left, I see that I have old support which I expect to become resistance. The time of the day was at the London close, which normally has a reversal. I also noticed that from this high down to this low, we had a 38% retracement of that move right to that same level. There's other Fibonacci levels lining up in here too that we go over in the coach's corner. So, you know, hey, it might have gone further up. I don't know. All I know is it was over a 3.7 to 1 reward to risk. That's excellent. Okay, so that's what I'm talking about when I say you've got to have a good exit strategy to maximize your reward potential and turn over your account rapidly and frequently, and that's how you really can grow it. So leave it at that. I hope you guys I just, the lesson here is just how important it is to understand and apply a proper strategy in how you exit your trades. Okay, hope you guys will have a great weekend. I will see you at the end of next week with another weekly trade example. Thanks so much. Take care.